Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your daily Bitcoin slash cryptocurrency update for December the 20th. Before I jump into the content for today's video, please do me a huge favor. Hit the thumbs up button on the video. Don't forget to subscribe to the channel, and also don't forget to click the bell icon to get notifications. Yesterday's video was one of the most liked videos I've done, so I really appreciate you guys taking the time to hit that thumbs up. I think it had like 97%. And I think it was like around 80 or 100. I have to go back and look now. But it was awesome. So if you guys can continue doing that, really appreciate you. That should help to grow the channel. And of course, the more people the channel reaches, the more I will be compelled to continue doing these videos. So let's talk about Bitcoin. So something happened last night. I was bored out of my mind because I was waiting all night for a setup, and no day trade setups came in, which is not unheard of, but it's a little bit unusual. So I was like, oh man, this sucks. So I was looking through charts, trying to kind of fill my time. And I pulled up some old charts that I hadn't looked at in 3 or 4 weeks. This is one of them. And this chart actually, as soon as I saw it, before I even really got into it, I realized that this looks a whole lot like a bearish retest right here. Okay, I'm going to talk about this chart in more detail in just a second. But that made me start thinking more about Wyckoff logic again. I had thought, and I had posted charts about this, even did videos about this. I had thought this was the break of our ice, and that's the reason I kept saying, hey, I want to go back up to 9,500. I want to go back up to 9,500. And, you know, we did obviously go back up to 9,500. This actually went up 10.5 on a wick, but closed right around 9,500 and then started moving down. But now that I look at it and the way that it's acting down here, I almost wonder if this part right here was not this, but rather just a little bit earlier in phase D. And I'm wondering now if maybe we're in the latter part of phase D, right? You can see here, down, up, down, up. This looks a whole lot, you know, like what we're seeing here. And if so, that's not the greatest news for me because, you know, I was wanting to open a short up around 9 grand, and this kind of throws a wrench in those plans. If this is what's happening, and I do think it's an if, then we'll probably see more downside before we get that bounce. And of course, the further down it goes, that bounce is going to be weaker and weaker and weaker. And I don't mean weaker in terms of percentage, like percent bounce. I mean, it's not going to go as high on the chart. So I'm wondering if this is what we're seeing. And you know, we'll know more after this next move, obviously. But when I look at this daily line chart, just to kind of walk through this thing again, the green line is the daily 50. It's up around 7,900 bucks. The orange line is the 200 moving average. It's starting to curl down in a pretty big way now. So it's down around 93.23. If we turn those off, just so that the chart's a little cleaner, we basically have 2 triangles, we have a trend line, and we have a channel. This top smaller triangle, it has a breakdown target of right around 58 to 5,900 bucks. Okay, and if you look, we broke out of it, came back up for the bearish retest of it, and then more downside. Now we've basically formed this larger triangle, and it looks like we've fallen out of the bottom of it, and this looks like a bearish retest of that triangle. That larger triangle actually has a target down right around 2,000 bucks. Does it sound absurd? Maybe, but I want you to look at these trend lines. This green trend line is one that's basically measuring the bottoms from like 2018 and kind of moving over, and it's going to be right around 4 grand or so, which will be interesting because it's right where this liquidity gap is. This purple line is actually the trend line going back to 2015, and of course it's down around $2,000. So it actually lines up pretty well with that triangle's target. Again, it doesn't mean we're going to go straight down. First of all, it doesn't mean we're going to get there at all. But second of all, even if we do, it doesn't mean we're going straight down. There's, you know, always chop along the way. There's always bounces and things along the way. Right now, we're still inside of the channel, okay? So you have to be careful getting too overexposed on any type of long or short position, because realistically, if we're looking at this channel, this is the trend line, right? Let's take a look at this. I mean, people are going to draw this different ways. A lot of people in crypto like to use wicks, and so they're going to draw it like this, and they're going to say this was support, and that's fine, by the way, it's legitimate. And then it was resistance through here, and it works, right? It does look like resistance. It did look like support. So I think that's a great line. I think it's worth paying attention to. But I think it's also worth paying attention to the close, right? When you draw it from the closes. Because if somebody had done that right here, when this pumped up, they could have actually opened a short position right around 10.2, which would have been an amazing place to short it. So we do have to keep that in mind, because if this thing pumps back up to this trend line, look at where that's at. It's right around 9 grand. Okay, so if it hits it in the next couple of days, again, I do not expect this to happen, but I'm just saying it's a possibility you have to be aware of. It could go up to 8,900 or 9 grand, which again would retest this line of resistance, and it would also make sense from a Fibonacci point of view, because it would be right around that 61.8 to 65 golden pocket area. Okay, so that's kind of what I've wanted to happen. I mean, I've been pretty clear about that. That's exactly what I want to happen, is I want it to pump up there so that I can get into a really nice short position. But I don't know. I think that it's entirely possible that we won't get that, and that this was actually a bearish retest, because this line wasn't just a line from here. It wasn't just that this was support and then okay, we're retesting this. You have to remember that this $7,400 area was extremely important back here too. On our initial run up, this was where we found support on our reaccumulation before the next leg up. So it's entirely feasible that it's going to be where we find resistance before the next leg down. That is just the opposite of what happened before. Okay, so I definitely wanted to point that out. I think it's worth keeping an eye on. Now, that being said, I'm also keeping an eye on the trend, right? If we measure the larger trend, if we take this from point A, make this our point B, this our point C, then our point D would be down here right around 4 grand, like just under 4 grand. Okay, and again, that makes sense. You can see that these lines mattered. Right here was support, right here it was support. Now this is flipped to resistance, right? Also, I'm watching this. This is our 3-day RSI. Of course, you guys know I love this 3-day RSI. This thing is actually going to close. This opened on the 18th, so this is going to close at about 45 minutes, okay? And you can see that unless it just pumps up all of a sudden, it's going to close underneath that blue line of resistance. So that's much weaker than what I would have expected. I would have expected this to break through that if it was going to move up to 9 grand and move toward the top of this box. That has not happened. So far, I'm more bearish than I am bullish, okay, in the short term. If we look at the weekly chart, same thing. We had come down, again, fallen out of the bottom. Price moved up, so it tucked back inside the box, and we're sitting right on support. If we fall underneath this, then I would not be looking for any type of long positions. I would expect that we're probably going to see capitulation, because back here when we fell out of it, obviously that's what happened. Remember what I've said in the past. You don't want to base something on one occurrence. So okay, this happened once, so maybe it happens, maybe not. That's only one piece of the puzzle. The reason I think this is possible, that's one reason. But another reason is also the Wyckoff logic may be in play, and that may be a bearish retest. So there are other signs that are also pointing to a possible capitulation move, right? There's also the fact that a lot of people probably bought around this area, around this $6,000 to $6,500 area, when it broke through it on the initial surge. And if they didn't sell and take profits up here, they could have stop losses sitting around there, which means if price moves back down and starts hitting those stop losses, we'll get a cascading candle, right? A giant red candle where stop losses start getting triggered and cause a liquidity issue where it just shoots straight down like 500 or $1,000 or even more. And I think if we do that, obviously it would put us outside the bottom of the channel. I think people would get super bearish, and I think we could see some type of large move. You have to remember that this move back here was about a $3,000 or $4,000 move, right? From here it was around 6,300, and this move went all the way down to 3,200. So I guess about 3 grand, right? Boom, 50% move down. So we could absolutely move down, maybe come down to like 4 grand, 4,100, and fill in this liquidity gap. Would not shock me at all. So again, I'm not going to put bids at 5,800 or 6,000 just because the risk reward is just a little bit off, and I just don't like that particular idea. So right now, my only bids on Bitcoin are I have some at 4,100 in case there's some kind of flash crash, and I have some down around 1,300 in case things get really stupid. Seriously doubt those are going to fill anytime soon, if ever at all. But I like putting those low ball bids in if I've got extra fiat sitting on the exchange, because why not? Doesn't cost anything to have them in there. Maybe one day I'll get lucky and get them to fill. So again, just keep in mind, these trend targets. The next trend target, the next level, excuse me, in the trend is, the 78.6, right around 53.74, and then the next one's around $4,000. If we draw this and we make this a little bit smaller and take the smaller move, then it could be that we get something like this, right? Where the full extension's right around 5,500. That's possible. It does line up with this little area right here of support and resistance, so that feasible. I wanted to show you guys a chart on Twitter. I really like this chart, and I don't think it's something that you want to trade off of, right? It's too big picture, but it was interesting, and I think it's good to kind of keep it in the back of your head. So let me pull up Twitter real quick. So this is actually a chart that one of the guys that I'm connected with, I don't know what you say on Twitter, I'm not a Twitter professional, but connected with, friends with, whatever. He follows me, I follow him, kind of thing. He posted this yesterday, and I really like this concept. Again, you can't trade it. You can't say, okay, this is what's going to happen. But it's just kind of interesting to keep in the back of your mind, because if this is what's happening, if we are indeed in a larger distribution phase of a much larger trend, let's say the 10-year trend, for example, right? We could actually be looking at the fact that we may just now be entering phase B. Now, there's good news if you're a bear. There's also good news if you're a bull. If this is indeed just now starting phase B, what's going to happen is we're going to have a sign of weakness, which is going to make a lower low. That's what he's got drawn down here. He has it drawn around $2,000. Again, I think if we go down to that level, we could go lower, but it's lower, right? Here's the AR, which by the way stands for automatic reaction. Here's the strength test. This comes back down to a SAL, which is a sign of weakness, down around $2,000, and then it could move up to an up thrust, right, around $25,000. Do some consolidating, then pump up to maybe $35,000 on the up thrust after distribution, and then it could go into phase D, which is the markdown phase. I think this is totally feasible, and I think this is much more realistic than people saying it's going to go to 100,000, 200,000, 500,000, etc. And I also think it's much more realistic than the people who are saying it's going to die, right? I don't think it's going to die, and I don't think it's going to go to $1 million a coin either. I think that with futures introduced, that people are hanging on to the stock to flow ratio thing, right? Oh, well, stock to flow ratio predicted at such and such price. You have to remember that the futures on CME are not physically settled, which means that Bitcoin is no longer scarce, okay? Yes, there's only 21 million Bitcoin. Everybody knows that, right? If you want to own a Bitcoin, you got to get one of those 21 million. But you can trade futures without ever owning Bitcoin. So if you don't need to own Bitcoin to trade it, then obviously scarcity is no longer a factor, which means that the stock to flow model is no longer valid. It was valid before futures. That's my opinion as a guy sitting in a spare bedroom. I don't think it matters anymore. I think it's much more likely we do see something like this. And listen, this is not bad, guys. I know that nobody wants to talk about this like 20, 25 grand. Oh man, you mean only 25 grand? That sucks. Are you crazy? That doesn't suck. That's awesome. If this thing goes down to $2,000, or if it goes lower, like I'm thinking maybe retest 1350, right? If it does go down to that level, we'll use $2,000 for easy math, and then it pumps to 30 grand, that is a 15x return. I'm sorry. If you're not happy with that, I don't know what to say, right? We're talking about a 15x return within 5 years if this plays out. And again, we're way too early. We can't say this is what's happening. Definitely not. But I'm just saying, if it plays out like that, I'm going to be okay making 15x. And I would assume most rational people would be ecstatic about making a 15x return. So I wanted to show you guys that. Also, I wanted to remind you about this chart. Obviously, this is the echo bubble chart that I did, and where I was thinking that maybe this was anxiety and this was denial. Maybe this is denial. And if you look on the chart, the pump's fairly small, and it just comes up to retest the bottom over here. Again, these charts are more of like an outline. They're not exact. You can't go, okay, well, it didn't do this and it did do this. But just saying, in general, if you're going by this chart, denial is a smaller pump. So maybe this pump to 7,800 really is denial. And of course, if it is, what comes next is panic and capitulation, which makes sense with all these other things that we just talked about, right? This capitulation being right around the corner. So definitely not interested in longing Bitcoin at these levels on anything more than a day trade. even in a downtrend, I'll long on a day trade that I'm planning on, opening and closing in a 15-minute window. I have no problem doing that, because you'll get uptrends on the smaller time frames, right? So just as an example, I mean, look at this. That's an uptrend, right? And let me show you guys something real quick. Oh, this is Bitstamp. I don't like Bitstamp. I don't trade there. Turn off volume so it's a little cleaner. Just I'll show you this. So this is a 5-minute chart, and if you look, watch. So even though I'm bearish, and even though this thing looks like it's going down and all that kind of stuff, on a smaller time frame, you had an A point, a B point, a C point, and your D target was 72.08. Where did it get to? Right? Got up to 72.20. So if somebody had entered this trade on this pullback right here, they could have got, about $60, $70 move. Measure it real quick. They entered on the close of the red candle. It moved up about 1%. You're not going to get the exact move. You're not going to get the full move, right? You could enter on the close. That would have been pretty easy. But on something like that, I probably would have taken like 0.5%, right? Just scalped it real quick. The other thing you can do on a trade like that, and I know I'm not going to get real deep into trading lessons, but the other thing you can do is just watch it, right? On this pullback, if you jumped in, and then you could just wait until it broke, closed underneath the red line, right here would have been your out, 0.47%, right? As long as it's riding on top of that red line, some people like to ride the 12 EMA on the smaller time frames until it breaks it. There you go, trend trade, almost 0.5%. So you can trade up trends even in a bigger downtrend. You can trade downtrends. That's why I like day trading, because the trend changes multiple times a day. I did not take that trade. It didn't meet my requirements for a trade, but some people do trade those things. So anyway, that's Bitcoin, okay? If we take a look at the altcoins, and I haven't even looked at these today, to be honest with you. I haven't really looked at anything today. I've been pretty much chilled out in December. I've got to get back on days because the trading has shifted again. I was on days and everything was happening like 2 or 3 a.m. my time. So then I was like, okay, so I swapped to nights, and now everything is swapped back to where it's like 7 to 10 a.m. my time is where all the good moves are happening at. So going to have to switch back. So it is still above the 61.8 on the trend, which is good, right? Let's get rid of the triangle because it actually did play out. Its target got hit. And let's look at some Fibonacci levels on this thing. So it's basically still under the 23.6. I do like how the 61.8 lines up really nicely. If you look at this, if you call this resistance, look at that, right around that 61.8 fib. So, alts still to me look like they're stronger than Bitcoin. And when I say stronger, what I mean is they look like they want to pop against Bitcoin, right? It looks like Bitcoin is basically stalling out, trying to move down or move sideways, whereas alts are trying to move up. Let's draw a trend on the bigger picture here. Where are we at on it? So again, you've got Bitcoin that looks like it's having a bearish retest. You've got alts having what looked like a bullish retest. So alts do look like they may gain some ground. How's dominance looking? So dominance is putting in a bit of a wick on the 3-day. What's daily look like? So it was severely overbought on the daily. It looks like it's trying to turn down. Hey, that'd be good, right? For alts. Still well above the 200 moving average. About a 3% drop is all it would take to get underneath that, though. And, alts in 2018, right? A lot of people remember the bubble and they talk about December being the top, December 2017. It was for Bitcoin, but guys, remember, alts actually rallied in the first quarter of 2018. They actually rallied after Bitcoin rallied. So it could be that alts are going to have some type of rally going into the first quarter and Bitcoin is going to fall. That wouldn't really shock me because if you look at some of the majors for clues, look at Litecoin is a great example. It's basically, let me get rid of all the lines. It has basically done a full retrace, right? Not quite, but it's pretty close to a full retrace. If you go back to January 1st, right around 31 to 32 bucks is where price was at the beginning of the year. So When it broke out and started the rally, it actually broke out right around $33, and price back here got down to $35.88. So it's almost completed a full retrace. So yeah, I definitely think that, you know, alts could pop, and a lot of them are severely oversold, or at least were severely oversold, and they just barely came out of it. I mean, look at Litecoin; it's all the way down to 21 on the daily chart. If we look at Ethereum had that huge dump as well. Same thing, right? Down around 21 on the daily chart. But then if you look at Bitcoin, it's not, right? It actually had bullish divergence, and it's all the way up here around 48.50. So, you know, I think Bitcoin has more room to fall versus alts. So, remember, I don't trade Bitcoin pairs in a bear market. That's what I do in a bull market. In a bull market, that's almost all I do is trade Bitcoin pairs. But in a bear market, I just trade Bitcoin and short Bitcoin, right? So I'm not going to long alts either. I'm perfectly fine missing any move they give up, right? Any alts that I want to buy, you know, I'm going to buy them when I feel like the bottom has been established on Bitcoin. So if I'm trying to do a positional trade on alts, I want Bitcoin to bottom first. So overall, you know, I think the important thing right now is just to keep an eye on Bitcoin's smaller charts and see if there's any kind of signals that signify which way it's going. This looks a whole lot like a BART to me. And if it does end up coming back down, you know, I think 9,000 is probably out the window. The other thing to keep in mind is this very well could be, I'll pull it up on Twitter because I posted it yesterday. This could actually end up being something like this, right? Where it came down, it's making a smaller triangle, and this ends up being a continuation pattern where it just bounces between like 6,400 and the top of this triangle until the first quarter next year, and then finally dumps out the bottom of it for that capitulation move. So, unfortunately, I don't see a whole lot of anything that says we're going to 9 grand. As much as I want to, it may just not happen. So, if you are trading, just be mindful that this is a dangerous time, and that, you know, whenever it decides which way it's going, it's probably going to be violent. It's probably not going to be slow. It's probably going to be explosive, either explosive down or explosive up. So me personally, I'll just keep doing the safe thing, and I'll keep taking these smaller trades on the smaller time frames, like the day trades, you know, 15-minute trades, hour-long trades, stuff like that. With all that being said, guys, please remember I am literally some guy sitting in a spare bedroom, so nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up. Also, don't forget to subscribe to the channel, and don't forget to check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and also where you can join my paid trading course if you'd like to learn how to trade. This is James with Crypto Common Sense. Trade safe.